Today is Monday, September 14th, 2020. Mike Bloomberg announced today he's committing $100 million in Florida to actually help Joe Biden, win that state. He's committing $100 million to win one state. Yeah, right. He's not going to win. Okay, especially when it's announced like that. US also is approaching a debt to GDP ratio larger than World War II, over 125%, basically 130% debt to GDP. And that also goes for PE multiples within that era in the earlier 20th century. We're past that now. We've reached PE valuations due to these mega cap tech stocks that people are buying massive OTM calls on, very, very speculative calls on, and people are betting against volatility. People are, extremely, extremely irrational with their money right now. And obviously the velocity of money is, probably the lowest it's ever been. If you look at the velocity of money in Japan, it's literally 0.2, 0.3. They're one of the best models because they've been doing it longer than us of MMT, of QE, of general monetary policy. And in fact, Steve Mnuchin actually announced today also that, and quote unquote, now is not the time to worry about shrinking the deficit or the Fed balance sheet. So he's not concerned. He hasn't been concerned. He never was concerned, and he's not concerned now. So he's never going to be concerned because, he actually really is concerned, but he knows that there's nothing that can be done. The battle has already been done. The injuries are already there, and there's nothing to be done but let the injuries heal and let time do its thing. I mean, we need to let the things fail. We need to let free market enterprise do its thing, but government intervention completely collapses that ideology. So there's no hope for that. There's no hope to replace monetary policy and fiscal policy with anything concrete, such as the free market enterprise, such as supply and demand, which is heavily manipulated by the Fed. Right. So also, last kind of thing before the trade recap, right? We made one trade this pre-market. The G4 central banks, their balance sheet, get ready for this one, their balance sheet surpasses 50% of GDP. Their balance sheet surpasses 50% of GDP, the G4 central banks. The largest central banks in the world has their balance sheet surpasses 50% of GDP. So they're amassing loads amounts of treasuries. I mean, take it this way, China and Japan are the largest holders in the world for treasury securities. The financial sector is among the largest since 1800. It's among the largest ever, sector in the world. And there's a reason for that. There's literally hundreds and hundreds of trillions of dollars with a T flowing in circulation throughout the world. Except the thing is that central banks now are not flowing money because there's no lending growth. So there's no loans to give out, especially at these extremely low rates. Financial regulations are tightening, and it's just a combination of very inflationary material, to say the least. So I thought that this might now be an appropriate time to switch over to the trade recap. So let's go right over there for you guys. Right, let's share that for you. The Thinkorswim, essentially SRNE, which actually is on my speculation watch list. I'll show you the daily chart and why. Just real briefly, so easily anything bouncing off 200 SMA. In this case, it's kind of the first time it's bouncing off since, kind of all the way back here. since it actually gapped up higher. So, it's been, basically 3-4 months. And, another thing we could actually draw here while I'm at it is one of my personal favorite trend lines is the descending resistance from um, from whatever high you're looking at on whatever time frame to to all the pivot points throughout the trend. I'm just trying to be as exact here as possible. So obviously not there. That's another pivot. So technically we could just draw it here. It's not a breakout yet because it's obviously not over this crucial level of current resistance. It was a level of support until it broke under it. But now, obviously, that 200 SMA, the dotted white line, is the new level of variable support, right? Because it's a moving average. So what is this price actually? 681 I have it as, and it goes all the way back to when it gained crucial volume share activity and also ATR, average true range. So, I mean, I haven't done any due diligence on the catalyst potential for the near term future, but I do like the setup technically. So obviously it's on my watch list and I play the momentum. So that's good enough for me. Right, so let's go back to intraday here. Right, let's go back to intraday, and I got in. Today they announced, what did they announce? Just a bunch of garbage, nothing really. It was basically a licensing for new loan activities. So all the four, loan debtors or creditors that, enable these lines of credit for them, well, they just extended that on a deferred basis all the way to 2024. They added a $15 million kind of investment as a loan term agreement. So it's really not an investment, it's more of a loan. So it's really not good news at all. So there's a reason why it's gapping down. These candles are constructed, so it gapped up from 625-ish to 740. Okay, so over $1 a share move just on an average of 5,000 shares. That doesn't make any sense. Clearly a pump and dump. Clearly a pump and dump considering the catalyst, considering the lack of volume supporting over $1 a share move higher on less than a $10 a share stock. It doesn't add up. So obviously I got in because I thought there would be, because I actually did see on the 5-minute, shares were starting to gain activity. Money was starting to come back in as we broke out here. So I thought I could snap a good, I thought we could get over 7 possibly again. But once I saw that it, rejected here already, rejected 3-4 times. But sometimes 4th, 5th time's the charm. So it was worth the try, especially when I got in at the bottom, which helped mitigate my risk tremendously. Right, so I wasn't willing to go much more below 75, 76. So either way, I would have basically broken even here. I believe, I basically broke even here. And I was lucky to catch on the bid at a higher price and got out. And basically from there on out, it just started absolutely fading. And I said in our chat that under 7 is fierce manipulation to the downside. So finally, those shorts got exactly what they wanted. They got what they wanted. Looks like they're coming in with a little bit bigger size to the downside. So that was a great trade. But anyways, that is it for the trade recap. Just be aware that we are not financial advisors and anything that we say is not investment or financial advice. Please consult with your own financial advisor or investment manager. We are nothing like that. We are nothing. All we are is entertainment. We provide entertainment, and we we speak at our own risk, and you should too. You should speak at your own risk. So with that, I thank you for watching. Please hit the like button and please subscribe for more. And I will be back very, very soon. Thanks, guys.